Good afternoon today. My name is Dunga and I'm the CEO of Ecovest Consultants Limited. Today I want us to talk about tax, and we are very specific on turnover tax and presumptive tax. Now, turnover tax is the tax you pay on the total sales. Presumptive tax is the tax that you pay on the portion of the county council permit that you already paid. Now, there's a relationship between turnover tax and presumptive tax. The relationship is, once you have paid the presumptive tax, you do a calculation of your turnover tax at the end of the month, and then you minus the presumptive tax that you had already submitted, so that at the end of the time you look at the difference. That difference is what you pay now as part of your turnover tax now going forward. Why is the presumptive tax? Presumptive tax helps the KRA to be able to capture your details, and they capture the fact that you are also in business, and the type of business you are doing, and the kind of the size of your organization, so they are in a position to gauge. So it's a mandatory thing. Registering for presumptive tax is mandatory and market. You can never pay for turnover tax before paying for presumptive tax. So presumptive tax comes first before turnover tax. Now, I'm going to take you through our calculations. This calculation is going to focus on those two tax. So that is why I have brought this today. Now, let's see. Suppose in your organization, you pay the county government county permit. You pay 50,000 per year. For you to register and pay presumptive tax, what you do is you take 15% of 50,000. This one comes to 7,500. Now, this one should always take place at the first month of the year. Then you go to turnover tax, which takes place now on the second month of the year, moving up to December. So suppose your sales is like 200,000. What is your turnover tax? Your turnover tax comes to 3% of 200,000. This comes to 6,000. This one is what belongs to January. So, what should you pay as your tax? You take your turnover tax, you minus the presumptive tax. So, that amount that you get is the tax that you remit. So you get 6,000 minus 7,500. It comes to an overpayment of 1,500. So that means you will not pay tax for the second month. So when you go to the second month, basically, you will again do your sales. So assuming your sales in the second month comes to around, let's say, your sales in the second month come to around 100,000. So back to the calculation. Sales, this is month 2. Sales is 100,000. So 3% of 100,000 comes to 3,000. 3,000 take turnover tax, you minus presumptive tax. You get at 3,000 minus 1,500. So you have to remit 1,500 to the KRA. So up to that point, you get to understand one thing, that presumptive tax is part of turnover tax. The only difference is that it forms 15% of your county council permit. But it is also the tax that requires you to register on the high tax so that the government can be able to capture your full details of everything. Otherwise, if you have got any question, check on us. 0722 100 213 is the number. 0722 100 213 is the number to check more. Thank you.